Morning, guys. I'm just going to let some attendees come through. Just bear with me a minute. I'm sure we've all seen what's happened in the markets this morning. Anyway, it's gone absolutely insane, as I'm sure you've seen. I mean, oil's just literally oil right now is up by nearly over 8%. It's just insane, isn't it? I mean. Price of gold as well, for anyone that's seeing the markets. Yeah. Is anyone trading? Has anyone got any trades on, especially in oil? Oh, actually, oil, WTI has just recently hit the $100 barrel mark. Wow, didn't Russia index down 50%. My God, I haven't even looked at the Russia index. I should have done, really. I just put a video out about a market update on that, but Jesus, 50%. Yeah, look, WTI has just recently struck the $100 mark, and God, Brent crude is up at touching a high of 105.74. But have you seen gold as well? God, gold is just powering higher. It's up by nearly 3.3% now. It's ridiculous. Also, the US equity indexes. Can we watch this session tomorrow as well? A question. Yes, yeah, there will be a record. You mean this webinar recording? Yeah, this will be available. This will be available within the hour following the recording. If you're talking about the live market update I did about an hour ago, this is already up and loaded. Right, guys, I'm going to kick this off. So, good morning. A very, very warm welcome to today's presentation. This is, as you can see on the slide, this is a presentation on trading psychology and to understand what it means to have a trader's mindset. By the way, my name's Aaron Hill, and I'm one of the market analysts here at FP Markets. So look, as usual, from me and the FP Markets team, thank you all for taking the time to be with us. Yes, so Guri, I think that's your name. I'm sorry if I've mispronounced it. Yeah, so this session will be available, as I said, within the hour, a recording. So yeah, it will be available tomorrow for you. So look, just really quickly, trading psychology is often an unexplored topic, but remains one of the most crucial for your trading success. Just really quickly, guys, I assume you can all hear me and see the welcome slide. So any issues, do let me know in the chat box, and we'll see if we can get you up and running. So look, just right off the bat, I'm not the psychologist. I can only talk about things I've experienced in the past with trading and from the other things that I've heard from fellow traders. Again, guys, a recording of this presentation is available it will be available following the conclusion of this webinar. Okay. As usual, let me just run through the disclaimer really quickly. The information contained in this material is intended for general advice only. It does not take into account your investment objectives, financial situation, or particular needs. FP Markets has made every effort to ensure the accuracy of the information as at the date of publication. Now, look, I'm not going to read through the whole disclaimer here, but really all it's trying to say is this is a presentation. This is not a presentation providing investment advice. It's solely for educational, guys. So okay, I have a question here. I'm in my trading psychology journey, 90% only psychology matter. Hopefully by the end of this webinar, that question will be answered, Guri. Okay, look, I don't know what happened with the text here, apologize. But so look, I apologize for those who already know me. This is for any newer names that have joined. So this is a quick about me session, I guess. So as most will know, I'm the technical analyst for FP Markets. I have more than 12 years trading experience. Also recently completed the CMT program. Anyone that's interested in technical analysis, as I always say, I would recommend this program. It's incredibly in depth. in depth, and you know, it really opens your eyes to the world of technical analysis. I also received the CFTe qualification as a result of completing CMT level 2. I also recently I'm a candidate for level 1 for the Chartered Financial Analyst program. Now this is incredibly intense. It's an incredibly intense program. It's just to give you an idea of the differences between the CFA program and the CMT program, right? The CMT level 3, and this is the most advanced level in CMT, has a book which covers about 950 pages. That's your text. That's what you have to read to and understand to pass the exam. So 950 pages. But for the CFA level 1, it's 3,000 pages. There's a huge difference, and so think very carefully before you sign up for the CFA program. Okay, so and finally, look, I specialize in price action. This is my main method. Fibonacci, the relative strength index. You know, most of us will know that this is a popular momentum gauge, and also chart psychology. Okay, as for topics, what is trading psychology or trading mindset? Right, so look, I'm just trying to think how I can really, you know, try. So here, what I'll be doing is I'll be providing a definition of what trading psychology is and what it means to have a trading mindset. Then I'll then kick off with how important is trading psychology. For newer traders, I really hope you take something from this, as I wish I honed in more on trading psychology when I began my trading journey. It is incredibly important. It is incredibly important for traders. And finally, recommended study. This presentation, you know, most of the ideas are largely based on the understanding I took from a book called Trading in the Zone by the late Mark Douglas. For those who have never heard of this gentleman, he's helped a number of traders by simplifying the psychological components of trading. And for those of you who learn better through video, I'll copy and paste. I have some really cool YouTube links that has Mark Douglas explaining the concepts. And these YouTube links I think are around 50 minutes a piece, but they are certainly worth your time. If you don't take anything else away from this webinar, please watch these videos. Please watch these videos and watch them again and again until they are quite simply ingrained, until it's stamped on your brain and becomes a habit. It will help transform your mindset. It will help transform it from that of an amateur trader, worrying about whether the next individual trade will win or lose. I know we're all guilty of that. I know that for a fact. I know that for a fact. To what a professional trader thinks like and understands that you do not need to know what happens, what is going to happen to be profitable. So look, and following this, even though I've not noted it, we will try and make some time to take any questions, but I will answer questions as I progress through the webinar. Also, feel free to go ahead and send any questions regarding the content today or any suggestions for future webinars to me and the research team at Market Analyst at fpmarkets.com, or alternatively, look, send them to the support team at support@fpmarkets.com. But do be aware, if you send it to the support team, what they'll do is they'll forward it to our research side of things. Okay. So we have Maggie saying, I'm listening to the audio version of the book you mentioned. Brilliant book. Yes, I couldn't agree more, Maggie. It's a fantastic book. Honestly, and once you finish that, you'll probably read it again. Listen to it again and again. And every time you listen to it, you pick up a certain, something you missed. And it's the go-to book for me. I know there's other books out there, but this is the go-to book. I found it so easy to read and it was so well put together. Yeah. Oh, did you, Maggie said, thanks for recommending. Did you get that based on the previous webinars? I hope so, because it will really change your mindset. We also have a comment here. Every trader Every trader is market. Anything can happen. Okay, I think I understand that. I'm not too sure though. Yes. Fantastic, Maggie. It's good. Really happy for you. So look, what is trading psychology? Now, look, most of us, I would say 90% of us got into trading to make money. For me, there's absolutely no shame in admitting this, as most of us strive to, we all strive to improve our standards of living, not only for us, but also our loved ones as well. Although there are several reasons why we may try our hand at trading. Look, common examples, of course, are the we could generate enough income to leave the 9 to 5, spend more time with the family, or doing things you really want to do. For me personally, I love what I do. I love the markets, so I'm doing what I love anyway. So it doesn't really make a difference to me. You can look, traders turn to this to fund a retirement plan as well, or or even teach our children methods of investing, so they would be financially set up for their future. So you're whatever the case may be, the primary goal is to generate a consistent income for many of us. As I found out in my journey, as I'm sure most of us here also did, trading is not as easy as we believed it might have initially been. One of the factors potentially stopping you from reaching a level of consistency is your trading mindset. So, what is psychology? What is trading psychology? Look, for me personally, trading psychology refers to the emotional and mental state, of in your trading. Aspects of your character and behaviors that can ultimately influence trading actions. Some of you may have a different definition, which if you want to share, look in the chat box, please go ahead. It will be great to hear. So trading psychology is, despite being an often overlooked subject, is as important for me. This is for me as important as other trading concepts such as markets analysis. The psychology of trading can be complex and does take time to learn. I really don't think we can actually suppress our emotions naturally in trading, to become a robot. But I know they can be controlled. Okay, fear and greed. So fear and greed. Fear and greed are two of the most commonly known emotions associated with trading psychology, and in life. So other emotions, that drive trading behavior are greed and hope and regret. So greed can be thought of as excessive desire for wealth, right? So in some circumstances, so extreme that it clouds rationality at times. So the characterization of a greed-inspired investor or trader assumes that this emotion it can lead to a variety of behaviors. This may include taking on high-risk trades, taking on larger position sizes when as I said, this can lead to high risk trades. So additionally, greed may also motivate investors and traders to remain in profitable trades longer than their trading strategy suggests. And also, greed is said to be the most apparent in the final phase of a bull market. This is more for investing, when speculation runs rampant and investors, essentially throw caution to the wind. On the other side of the fence, we of course have fear. Fear causes traders to close out positions prematurely, or to refrain from taking on risk because of concern about loss. I think there's a bias I mentioned. I went into once. I think it's loss aversion bias, I think it's called. I think, don't quote me on that. It's been a long time since I've looked at biases. So look, Fear can also morph into what's known as panic. Regret may also cause a trader to get into a trade after initially missing out on an initial reaction because a currency pair moved too fast. And this leads us nicely on to the fear of missing out. Can be the most, which can be the most, treacherous emotions prevalent in the financial markets. So the fear of missing out, or FOMO, as it's known. I'm just trying to think of the best way I can describe this. So look at Bitcoin. Obviously not Bitcoin right now, because Bitcoin is actually right now it's plummeting. But Bitcoin's rally in its, I guess we could say, heyday. This type of movement entices traders to buy, which can lead to huge emotional stress when the market reverses, as it is doing right now. So the fear of missing out gets you in the market, as it's rising, because you just do not want to miss out on that move. But once I'm just going to look at the Bitcoin chart right now, actually, and Bitcoin is currently down by 5%. So, and there's been a huge correction over the, I can't remember, over the past, let me just check. Just bear with me. Yeah, since late November of 2021, Bitcoin has been, navigating lower. So this is a perfect example of what I'm trying to say here. So look, FOMO is simply the fear of missing out on profit you might make if you don't buy into a rising market. I guess you can also say the same for selling markets as well in a declining market. So an example of FOMO is not just in parabolic markets and major sell-offs. We can also, I found that I was most affected. I still am affected at certain times by this. I suffer from FOMO at levels I have not fully backtested. This was a mistake on my part for not fully testing the strategy. What I mean by FOMO at key levels is, so imagine a support level. That bounces price, of which you do not fully have confidence in, but you have seen it work a number of times in the past. Just by you've seen it in the past, bounce price. So anyway, so you see price bounce and you jump in. This is FOMO, a move off support. So price moves off support and you're scared, because not scared, but the fear of missing out is so strong. Your fear of missing out of price continually rising from that support level. You jump in. So what you're doing there is really increasing your risk reward and really putting yourself at a disadvantage. So I'm trying to think. I hope this is clear. We've got a few questions here. Angelica, are you giving an e-certificate? No, we're not. There's no e-certificates for this webinar. Okay, let me just hold on. We had a question here from Nick. Can fear and greed be measured in mathematical numbers? Look, I think for anyone that knows the VIX, that's basically a mathematical calculation based on the S&P 500 options, and that's often viewed as the fear index. Now, if you look at the VIX now, I'm pretty sure that will be high, because what's happening is people are buying put options as a protection, as protective puts, I think they're called, to protect themselves against the declining equities S&P 500 at the moment. So yes, it can, in my opinion. Greed, I'm not too sure about greed, but fear for sure. You can look at the VIX in terms of mathematical numbers. Greed, I'm not too sure. I bet there is something. There has to be something, but off the top of my head right now, I cannot think of anything, Nick. Okay. Right, another emotionally based decision in trading is a concept known as revenge trading. I'm pretty sure most of us have heard of this. This happens after traders suffer a significant loss, or sometimes, as in my case, consecutive losses. So rather than looking to their trading plan to make sensible decisions around the incident, traders often jump straight back in the market. And that's where things can become really challenging. Traders tend to end up plowing a lot of money in a trade that loses in attempt to reverse losses. Often making, what this can do is often make the losses even bigger. And this, as you can imagine, this causes a vicious cycle that has to be avoided at all costs. I know what it feels like to suffer from this revenge trading. I've been there. I know what it's like, and it's almost like you're being pulled into your screens to trade. I want that money back. It's just something to avoid at all costs, as I've already said. And the way you do that is have this in your trading plan and have confidence in your trading approach through back testing. As I'm sure you can appreciate, I've barely scratched the surface in terms of trading psychology here, but I hope what I've said has been clear, and hopefully helpful to some newer traders here. Okay, we have a question here. How do you understand trading sentiment, trader sentiment before a news release? Let me get back to you on that question. Remind me at the end, and I'll try and answer that at the end. Okay, so look, trading psychology. How important is trading psychology? Trading psychology for me should be one of the first things we learn before anything else. I know it's not the case with many of us. We jump into the charts, we look for support and resistance, we look for supply and demand, we look for Fibonacci setups and the RSIs, the MACDs, and I do understand it, and I know what happens. But if I had my time again, beginning, I would look at trading psychology. I would be reading books like Trading in the Zone to understand how the mind can really affect your trading. So look, you can have the best understanding of markets and the trading strategy that most of us would sell our granny for. But without having a handle on your mindset, I believe it's almost a guarantee you will fail at trading. I know this may seem a bit strong for some of you here, but you will fail at trading if you do not have a handle on your trading psychology, irrespective of the trading strategy employed. This is how important trading psychology is. So I firmly believe after talking to so many traders over the 12 years or so I've been involved in trading, the key to trading success is emotional discipline. If intelligence was the determining factor, there would be a lot more people making consistent money in the market. As some of you are likely aware, doctors, lawyers, engineers, some of the most intelligent people in the world try their hand at trading and quite often fail. Yet on the other side of the field, we have successful traders who have little education. My mentor had a geography degree, and he did work. He worked at the bank. I think he worked at Credit Suisse, but he had a geography degree, and he even said to me, he's no more intelligent than me. And yes, a prominent, a clear conversation I had with him is he told me, now you're ready to be trading, because my mindset had been flipped. He flipped my mindset to thinking win, loss, win, loss, win, loss. It's not about that. It really isn't. You have to really get your mind away from this win-loss scenario. All right, we all love winning trades. I get that. We all love winning trades. And most of us, if you're sane, you don't like losing trades. But this is really the business you're in. You need to understand that wins and losses do not mean a thing if risk is controlled and you're following your trading plan. So what made me personally take trading psychology seriously, aside from my mentor giving me advice, was one event I remember vividly. some of you may remember this. I've spoke about it in previous presentations. So I was trading a live account about 7 years ago, I think 8 years ago, I think it is now. And I was trading a fairly large account, and I was actually doing very well. I stuck to the rules for most of the time, but there was one trade that really changed my whole perspective on trading and really kicked me in the butt to understand more about trading psychology and really push me. Just to note, this method, this was a method that I back tested, so I did have some stats to work with, but looking back, the back test was not even close to enough, in my opinion. Anyway, so look, I was long it was the pound dollar, and the trade was hovering about, I think it was about 20 to 25 pips in my favor above the entry point. So, and my stop was, I think it was around 25 pips, my stop. So I was in a pretty good position for the trade. It was a short-term trade. So price was not really doing much for about 2 hours. So it was hovering, it was ranging, gain, loss, gain, loss, gain, loss, not doing much. And potentially high impacting news was due soon. So my plan stated that I would, if possible, reduce risk to break even if news was due. But did I do this? I absolutely did not. And I was so convinced I was right on this one individual trade, which is a big, big mistake. So I was so convinced I was correct in this trade. I actually increased my risk. I didn't increase the position size. What I did was, I did effectively increase the position size. What I did was I moved my stop loss lower. The reason I moved this was to give my trade some breathing room in my. So the rationale I gave to myself was to give my trade some breathing room with this news coming out, because I was so convinced I was right, which obviously was a big mistake. The news came out negative, lower than expected, I believe, for sterling, and price plunged through my stop in a matter of seconds. It actually jumped. It jumped below my stop, so I lost more than I actually moved my stop to. I won't tell you how much I lost, but it was a considerable amount for me. And look, following this trade, I actually, this is what I remember clearly. I actually went to the bathroom and I just washed my face following the trade, and I was covered in sweat and I didn't even realize it. My eyes were bloodshot, and I knew from that point on that I needed to change. If I wanted this to be my career, I needed to change. I needed to really focus on how I was thinking about trades. How my emotional discipline needed to be controlled. So look, sorry about that. I've gone on a bit too much about that, but I hope that really emphasizes how important trading psychology really is. It is well known that you could give two different people a winning strategy, and each of them will return different results. This could be not following the strategy's rules of engagement, or risking too much on any one individual trade, or even passing on some trades because you think you know better than the system that you've tested, that you've back tested. What I mean by a winning system, a winning trading strategy, guys, is a method that is a method of entry and exit signals that have proven to be profitable over time. So it's a trading edge, if you will. So number 3, is trading possible, or is successful trading possible? Look, I know it is. I know for a fact it is. I know a number of professional traders as well, and successful traders who are no more intelligent than me or you. So yes, it is possible, despite the negativity you read and from other traders that just haven't learned to control their emotions and haven't learned how to trade in the correct manner. So yes, look, it is possible. My mentor also proved this to me. It was very important to me at the time. My mentor also proved to me trading was possible, showing me his accounts. I mean, this was a guy that wasn't on the internet selling his course or anything. This was a friend that I met just luckily through a forum, and we become good friends. And he showed me his accounts. I got to know him, and there was a trust. So he showed me his accounts and showed me his history. and his accounts were very, very large. So he was trading big amounts of money for a retail trader. And this really, as you can imagine, any negativity I read on the internet, I knew it was possible. I just know it was. I knew it was possible. So hence why I've been in the markets, and I'm still very passionate for 12 years now. Look, as I said, I was very skeptical about whether trading was worth my time or not. And I can tell you without a shadow of a doubt, there are traders who make consistent returns, consistent income from the markets. And they're not these guys that are going to be shouting on YouTube. They are not these guys that are going to be shouting through forums. But these professional traders, what they do is they think very differently from most of us. And that is the key point I want to get across here. Maggie, GB pairs are so volatile. Yes, I would imagine they are right now as well. Yeah, the pound's down over 1% lower. It's just insane. The markets have just gone crazy right now. I mean, I'm just going to check oil just really quickly. I'm sorry, guys. I've got the charts. Yeah, oil's still the same. Yeah, okay. Look, just to be clear, the professional traders I know are not, look, I guess what you would call market wizards. They're certainly not. And they're not geniuses. They're certainly not Warren Buffett. They're just your average Joes. I just want to really hone this point in. But what they realized is that in order to reach their goals in trading, they have to think differently from the average trader. As the average trader, as we all know, loses. So when I began trading, I thought that market knowledge and analysis, the ability to pinpoint high probability turning points was all that I needed. And I'm pretty sure some of us here, especially newer traders, will be thinking the same, but it's just not the case. And in that book, this is what I got from Trading in the Zone. This was a clear point from Mark Douglas. So look, I believe this is the key difference between an analyst and a trader. So an analyst operates objectively, right? So with almost zero emotional control. So I'm here analyzing the charts. I have no emotional connection to whether it goes up or down. The trader, however, has to face his fear. Has to face his or her emotional demons to succeed. So to be a trader, you need to be a very good analyst, also a very good trader. So they're two very different animals entirely. This is why you see analysts with great ability to highlight high probability areas, but do not personally trade. And this often confuses newer traders. But the reason is these analysts may simply not have achieved the emotional discipline required to take advantage of their analysis. So I really hope this makes sense, as it's incredibly important. Okay, we have a few questions. Can you share your strategy? I can. I think we have a couple of webinars coming up soon where I go into detail. I have a couple of strategies I look at. One is very short term. One is on the M5. It's quite a complex strategy I use. It's more to do with trading psychology. So when I say trading psychology, I mean I'm looking for areas that traders will place stops on the short term, and I try to take advantage of that through the charts. So it's a very complex strategy. But there's another one which I use in my market analysis, which is essentially multi-time frame technical approach. And you can see that every day in the daily market analysis and also the weekly market analysis. So what I essentially do is I look at the monthly, the weekly, the daily to gauge my higher time frame direction, and the H4 and H1 to gauge the more shorter term flow. And I work that way. So for instance, if you know weekly resistance is in play, you also know daily trend line support has been broken. We have bearish direction on the weekly time frame. Now, if that's being confirmed on the H1 time frame, for example, where we're breaking below a psychological figure, this is a very good opportunity to be looking at bearish scenarios. For someone starting up, is it better to start with discretionary or systematic trading? That's a very, very good question. I'm primarily a discretionary trader, but through CMT level 3, what it really did was open my eyes to systematic trading. And it's so systematic trading it takes a little bit longer to understand because there's more components, especially with the back testing, to understand. I'm not fully versed with it, to be honest. So, but I would I like both methods, to be honest. I was against systematic trading initially. I think that's called a non-discretionary approach. I was completely against it, but since doing CMT level 3, it's opened my eyes to how effective it really can be. So I'm not against it. I'm interested in it. I just don't have the time to learn about it at the moment. And for my discretionary approaches, especially the M5, the lower time frame, I don't think I would be able to, form a algorithm out of that, because it's mainly visual. And look, if someone could do that, I would be very open to it, of course. But yeah, for me personally, I would. Both are very good. To answer your question, both are very good. I would say look at systematic trading if you're emotionally challenged with trading, because it kind of limits the emotional component of trading when you're systematic trading, right? Because the computer does the entries for you, and that can limit things like over trading, under trading, taking on more risk when you should, and things like that. So yeah, I would probably lean on to systematic trading if I started again, maybe. I'm not too sure. But yeah, I hope that answers your question. I'm sorry about that, Roy. Okay, so again, how important is trading psychology? We have a number of bullet points to get through here. So look, these are things that I know traders really struggle with from a psychological point of view. So paper trading or demo trading is something I see traders sometimes sidestep, as they're told there's little point in trading on demo, as the psychological element won't be present. I do agree that there's no psychological element present on a simulated account. I can only tell you what I found in my experience in the years with the charts, and for me, a demo trading is useful. And this is in fact, Mark Douglas states in his book, and I remember this clearly, that demo trading offers a trader a representation of what your trading could be like if you followed your trading rules. Now, if you think about that, it makes total sense. The theory is that on demo, we're not affected by the emotions, right? Trading, we're not affected by the emotions that trading with live money, our own money, brings to the table. So if you're able to make money on demo, theoretically, you should be able to make money on a live account. But with a live account, you deal with the emotional aspect, and that is the key issue. You often hear traders complain that their results on demo were far better than their live results. This is highly likely down to trading psychology and discipline. Now, without this understanding, as I've said already, trading is an incredibly tough business to succeed in. So demo accounts are perfect to test strategies and familiarize yourself with the platform's functions. Look, trading losses. So what generally happens to a trader when they lose? How do we feel? The same can be said for winning trades. How do we feel with winning trades? When I first began trading, I took a loss extremely personal. Consecutive losses were extremely difficult for me to handle. I'm quite a competitive guy, especially in sports and things. So I did not like losing. So it was a big learning curve for me. The feeling of losing and being wrong at the same time was just too much for me to handle at one point. It was just a psychological shock, if I'm being truly honest. And I actually felt the market did this to me, which is simply not the case. I was doing this to me. It was me against me, if that makes sense. As for winning trades, I often slipped into, I'm sure many of us have experienced these emotions. So for winning trades, I often slipped into a euphoric state where the world was, for anyone that's lived in the UK, where the world was literally my oyster. We say this often. consecutive wins often made me feel like a trading, dare I say it, a trading guru, where nothing could go wrong. Now you can imagine what happens when you feel like that. You take on more risk. You cannot lose. Yeah, it's just, I don't really know what else to say to that. But you feel invincible when you have consecutive wins. So your reactions to wins and losses will likely be different. But this is how wins and losses made me feel until I understood the psychological component of trading. What helped me was focusing my mind on my trading mindset. I knew that losses are a part of trading. I knew that. I'm sure we all know that here. The losses are a part of trading. But the key thing, as they are in most businesses, right? But the key thing here is that I did not truly accept this. It's okay knowing this, but did I truly accept that losses were a part of this business? I did not. And therefore, I did not accept the risk. And that was my problem. That is what has really opened my eyes, especially from this book. It really opened my eyes to, and from my mentor, of course, telling me these things. But sometimes it takes so many, I think it takes so many days to learn a new habit, right? Or to learn a new skill. And this was an emotionally painful skill for me to learn. So without truly accepting the risk and accepting that in any individual trade you put on, no matter, irrespective of the confluence you have or the trading setup, trading strategy you have, I'm just trying to think how I can say this. So look, without truly accepting the risk and accepting any individual trade can lose money, the reaction to a loss will be painful, emotionally painful. What my mentor did to me to overcome this fear of loss, well, not overcome the fear, more control it, was to ensure all trading strategies had a positive expectancy before hitting the live markets and trading with real money. Now, I won't go into too much detail on this, but trading expectancy is the average you can expect to win or lose per trade with your method. So when a large number of trades are taken, which can be found by paper trading, of course, to calculate the trading expectancy, you need to know three things: your win percentage, your average win, and your average loss. So the calculation for expectancy is the probability of win, so your percentage, or your winning percentage, multiplied by your average win trade, so say $200, minus your probability of loss, that's multiplied by your average loss. It's quite a simple calculation. But so let's say you win 60% of the time, and that's an incredibly good win ratio, by the way. And your average win is $200. So that's 0.6 multiplied by 200, which equals 120. And then minus this by obviously 0.4, 40% loss ratio, multiplied by $100. This is what you lose on average. This is what you lose on your trade, which is 40. So 120 minus 40 says that on average, we generate $80 on each trade. So our system has a positive expectancy. Now, if this number came out negative, then you have an issue. It's not a system you want to be trading. This is the same as your expected payoff ratio value, which is seen on the usual MT4 end of month reports, I believe. This will be at the if I remember correctly, this will be at the very top of your statement report, generally under the gross value, loss value. And all this is simply calculated by dividing the net profit by the number of trades taken. So using the case we just spoke about, and assume this was over 100 trades. So 100 trades. So 12,000 minus 4,000 gives us 8,000, and divide that by 100 trades. This equals $80 for the expected payoff per trade on average, which is $80 US. Obviously, this metric obviously this metric must be greater than 0 for a positive expectancy in your trading in your trading system. So distractions. Now, we as humans, we're all human, right? So we all have things going on outside of trading. Unfortunately, these things can really influence the way we trade. I have a few questions. Just bear with me, guys. I'm sorry for asking the newbie questions, but here is another one. Is it healthy to start trading in the volatility of the cryptocurrencies instead of other markets? That's a good question, actually. That's not really a newbie question. You'll be surprised how many intermediate traders are still unsure of that. Again, this is a personal thing, really, to be honest. So, yeah, a personal thing. So I would say if you're just starting out, I would not head for volatile markets, to be honest. I do not see the point in that. I would start with the more liquid, less volatile markets. So think of the euro dollar, I guess, euro dollar, the Aussie dollar. So yeah, look at the average true range of the currency pairs I'm talking about. I would not trade crypto, to be honest, but look, some people are going to shoot me down for that. I don't trade crypto at all. But yes, so it's really trader dependent, to be honest. But for me, I would always, especially if I was starting out, I always went for the less volatile cryptocurrency pairs. Then you can find the volatility with the ATR, the average true range. Sorry, I joined this late. How can I get the recording? Nazar, you can get the recording. There will be an email sent to you, I believe, and there will also, the recording will be available on the main FP Markets website and also on YouTube. Yes, okay. So look, distractions. We're all human. We all get distracted, and trading is not the only thing in our life, right? So if, for example, you had a terrible day and tried to trade, what do you think the outcome will be? It is unlikely to be a positive one. If you're upset and angry, this may lead to aggressive trading that could prove disastrous. What I mean by aggressive trading is taking on more risk than your trading plan permits. And of course, therefore, revenge trading will be possible because you're already in a bad mood, and having a loss will make you even more volatile, I guess you could say. So you may suffer from revenge trading, which will make your day 10 times worse. So I know this may seem common sense not to trade on these days, but you'll be surprised how many traders actually go ahead and trade and often make their day 10 times worse. So it is recommended that if you're distracted, you should not be trading. It can really influence your trading decisions. Just simply take a day off, right? Just simply take a day off. The markets will be there when you return, and you'll be in a clearer state of mind, which is imperative for successful trading. Now, thinking in probabilities. So thinking in probabilities, what does it mean? What does it mean in trading, and why is it essential to one's consistent success in trading? So I think the reason why so many fail in trading is that as humans, we crave certainty. We crave certainty, security. And by doing so, we add more lines to our charts. We add more indicators. We go into trading chat rooms, look for the trading god of the trading chat room, look for the gurus on YouTube. It's almost tiring now how many gurus there are. And hope others will confirm our opinion and all add to our certainty. But there is no certainty in trading. I need to repeat that. There is no certainty in trading or investing, just probabilities. As soon as you figure that out, the sooner you will be profitable. It is therefore recommended to actually embrace the uncertainty and stop trying to find the infallible system or the infallible guru that's placing charts that have rallied 100 pips and he's got into at the low and exited at the high. That's easy to do. I can do that in hindsight, no problem. And what? Yeah. So Look, the probability is simply a measure of how likely an event is to occur out of a number of possible outcomes. And this is something I took from, again, I took from Mark Douglas's book, Trading in the Zone. Thinking in probabilities for me and sums up the essence of trading. And this is something my mentor also told me a number of times, and I never really understood. So whether a trade wins or not is not a concern. Look, no one likes losing. I do understand that, but it is a part of trading. You cannot escape this. But the beautiful thing about trading is that there will be other trades around the corner and they could be winning trades. If you've done your back testing and understand the system or trading strategy has an edge, a positive expectancy, your work is done. You then have to simply follow your rules and trade the markets. This sounds simple. I do understand that. It sounds very simple, but clearly many traders do struggle with this. So if we understand that the trading system recognizes a positive expectancy, a high probability of making money over the long term, is there a need to stress whether the next trade will be a winner or a loser? Absolutely not. And this is why when you speak to professional traders, they almost have a calming vibe and almost, you know, they're almost indifferent to the outcome of their trades. A loss is a loss, a win is a win. Move on to the next trade. Look, discipline. Okay, so discipline is a key trait. It's a key trait in life and also in trading, of course. The market gives you infinite opportunities to trade, right? So you can literally trade several currency pairs each trading day. That's in Forex if you trade FX. Traders require the discipline to do nothing when there are no opportunities present, but must still be alert for potential opportunities. Then they need the discipline to act instantaneously when trading opportunities occur. Once in a trade, traders require the discipline to follow their trading plans. Okay, so really discipline is needed to backtest and forward test your trading strategy. Discipline is needed to exercise trade management and follow your trading plan. Discipline is required to step away from your trading when you're emotionally, shall we say, charged. Discipline is required for everything, not only in trading, but also as I'm sure you're aware, as well as in life as well. Okay, recommended studies. So as I mentioned, I'm not a psychologist, and most of what I understand now is taken from this book here, Trading in the Zone. What we discussed was a combination of what I got from this book and also my own experiences over the years. Those who are interested in furthering their understanding from professionals, Mark Douglas's book is a must. I know I've mentioned it about 3 times now. For any aspiring trader, again, he really does a great job of simplifying the trading psychology. In his books, Trading in the Zone and also The Disciplined Trader, which are worth every penny, in my opinion. Each time I read them, I feel like I learn something new. In Trading in the Zone, Douglas states that having a probabilistic mindset accepts 5 fundamental truths. So anything can happen. It's partly what we were talking about in this webinar. Anything can happen. So an individual, you do not need to know what is going to happen next to make money. There is a random distribution between wins and losses for any given set of variables that define an edge. These are taken from Mark Douglas's books, by the way. An edge is nothing more than an indication of a higher probability of one thing happening over another. It's not a guarantee. It's a probability. Every moment in the market is unique. So those are 5 points that I took from Douglas's book. If you guys are interested, I'll post I've got 4 YouTube links here in the chat box for all to watch. They are reasonably long presentations, but I think they're about 50 minutes to an hour. But boy, are they worth the time. This is for sure. If for any regulars here, my next webinar, be sure to let me know what you think of these links. I'm going to put them in the chat box right now for you. Just bear with me. Let me know what you think of the links, and let me know if it's changed the way you look at the markets. Let me just throw these links in there. You should get them now. So these are the links. Do save them, and make sure you look at. Make sure you do watch them. Look, although most of my focus has been on Mark Douglas's book, other well-known books are out there in the market. The Market Wizards by Jack Schwager. I think that's how you pronounce his surname. There is a total of 4 books in the Market Wizards series, I believe. So you have Market Wizards, New Wizards, Stock Market Wizards, and Hedge Fund Market Wizards. All these books consist of interviews with top traders around the world. What I absolutely love about these books is Schwager got these traders to share what's going on in their minds when they trade. So this is why I recommend these books. Another book worth checking out is The Daily Trading Coach by Dr. Brett Steenbarger. I think that's his surname. This is not a book I've personally read, but I heard through friends and other traders it's a great read. I just haven't had the time to read it. The idea of this book is because it encourages you to read a lesson each day. There's lessons in this in the book. Okay. Q&A. Let's see what's oh, you don't see the links. That's a shame. Just give me a second. Oh, I sent it to the wrong. Just bear with me. I'll send it to the chat box. Everyone, there we go. Right, you guys should see all the links now. Yeah, you should do. Just let me know why in the just let me know, just put a Y in the chat box and that'd be good. So they're coming up. Yeah, brilliant. Okay, fantastic. So just save these links. Do look at them following the webinar or when you have time. Instead of watching Netflix or anything like that, put these on. And you can thank me at the next webinar, okay? Right, so look, any questions, guys? Are there any questions? Just looking. Yes, Maggie, he really got inside your mind. Yes, I have Mark Douglas's work printed on my mind. Yeah, I could think of worse things to have printed on my mind than Mark Douglas's work, but it's really, really helped me, and wholeheartedly recommend his stuff. Okay, so yes, Maggie, I found discipline is the hardest. Of course, discipline's very hard, isn't it? Yeah, so it's just something you need to work on, I believe. Sentiment. So let me just find that question on sentiment. Sentiment. All right. Okay. I'm just trying. Sorry, guys. How do you understand trader sentiment? So, how do you understand trader sentiment before news is released? I'm not sure about before news is released, but sentiment indicators. So you could look at the COTS report, the Commitment of Traders report. You can look at the brokers' sentiment. They have I forgot what they're called now. They have the bids and offers in the markets for that broker's feed. God, off the top of my head now, I can't remember. There's a few sentiment indicators, but off the top of my head, I'm completely fried now from this webinar. Yeah, community trend. There's a few things. To be honest, I don't really look at sentiment. To be honest, not much. You can find sentiment on the chart, if you know. For me, anyway. Are there any Excel spreadsheet that automatically calculate the trading probability? That's a good question, Nick. I'm not sure off the top of my head again. I'm sure there is. Are you talking about the expectancy? So the expected payoff. Let me just see if I can write this. Yes. Okay. Just bear with me a minute. Bear with me. Let me just see if I have this calculation noted down, and I will send it to you so you can. Okay. I have it noted here. Just give me a minute. Bear with me, guys. I'm just trying to get the calculation for you. Now, bear with me a minute. Yeah, I'm not. So look, what I can do is if you send me an email, the formulas. So just look, I can't get it for now, but just next week will be fine. Yeah, it's fine. Look, send me an email if you want, or send me an email privately on here, and I'll email you the formula. Let me just try. Bear with me a minute. So look, the expectancy is the probability of win. Let me just write. I'll write it in for you. 1 second. Let me just write it in. Bear with me. So the probability of win multiplied by the average win, and then the probability of loss multiplied by the average loss equals your expectancy. Yes, there we go. So that's the formula for your expectancy. So that should be above 0. Expectancy, yes. There's also expectancy. Yeah, there's I'm sure there's plenty of expectancy calculators out there. So yeah, any other questions other than what I've seen so far? If not, I'll move on to the final bits. So look, I sincerely hope some of you have taken something away from this presentation, and walk away a little bit more knowledgeable. The next webinar for this month, to be on the lookout. Oh, this is the last webinar for the month, I believe. Yes, this is the last webinar, if I'm not mistaken. The next webinar is on the 3rd of March, and embarrassingly, I forgot the title. Just bear with me a minute. Just bear with me. So the next webinars for March is Introduction to Derivatives, and that's on the 3rd of March, I believe, at 9 a.m. So we're changing the times, guys, to 9 a.m. We also have a webinar on the 10th of March at 9 a.m. and that's price action. This is where I deep dive into price action. So this is really a beginner's guide to its price movement. And then we have trading plan, the importance of a trading plan on the 17th of March. And then we're diving into the world of Fibonacci on the 24th of March, and again at 9 a.m. Yes, so we've noted that in the chat box. Excellent. So as always, guys, look, if there's any specific topics you would like the team here to talk about, please be sure to send in your suggestions to either support@fpmarkets.com or alternatively direct to our research team at Markets Analyst at fpmarkets.com. Also, as I say, look, register for our Telegram channel and get instant updates. The sign up tab will be in the chat box, I believe, very shortly. And also, yes, you can alternatively you can find that on the main FP website. So look, guys, do watch those videos, do watch those YouTube clips, and then let me know. Even send me an email, guys. Just send me an email to marketanalyst@fpmarkets.com and tell me what you think. I will guarantee you 99% of you will love them, will absolutely love them, and you'll continue to watch them. So yeah, do let me know, and or alternatively, just let me know in the next webinar. So look, on that note, have a great day. Trade safe in these markets, guys, with the current volatility. And look, I'll see you all again in March, at the beginning of March. Thank you all so much for joining.